Ever wonder what it takes for a company to, like, survive, up against streaming giants? A global pandemic and a volatile stock market.
Hmm.
Well, that's exactly what AMC Entertainment is facing right now.
Hmm.
So today we're diving deep into their financials and their management and just overall market sentiment
Right.
to see if their stock is like a hidden gem or, a potential trap.
Yeah.
If you're into this kind of deep dive into business and finance,
Uh-huh.
make sure you hit that subscribe button so you don't miss out on future episodes.
That's for sure.
For this deep dive into AMC Entertainment Holdings Inc.
Okay.
That's NYSE AMC for all you stock ticker fans out there.
Got it.
We've got a ton of sources for you, including articles and financial reports, even analyst ratings.
Nice.
It's all linked in the episode description, so make sure to check it out.
What's fascinating about AMC is they're not just a company. They're a reflection of how we consume entertainment in the digital age.
Okay, so let's unpack that.
Okay.
Most people know AMC as a place to, catch the latest blockbuster.
Right.
But how would you describe their, core business model?
So at its heart, AMC is the world's largest movie theater chain with about 900 theaters and a whopping 10,000 screens globally.
Wow.
Their primary revenue comes from ticket sales and, of course, those tempting concession stands.
Because let's be honest, who can resist that buttery popcorn smell?
Exactly. But AMC recognizes that the traditional movie-going experience needs an upgrade, especially with the rise of streaming services, so they're diversifying.
Oh.
Think premium seating loyalty programs and even venturing into retail with their own branded popcorn.
Oh, yeah. I've actually seen that AMC Perfectly Popcorn at the grocery store.
Yeah.
It's pretty good.
It's not bad.
But even with these initiatives, the movie theater industry as a whole is facing those strong headwinds you mentioned.
Absolutely. The convenience of streaming services like Netflix is a major challenge. Consumer habits are evolving, and it's a real uphill battle to entice people to leave their couches for a night at the movies.
So how is AMC fighting back against this, streaming takeover?
Yeah.
Are they rolling out any innovative strategies?
They are. AMC is making significant investments in upgrading their theaters with premium formats like IMAX and Dolby Cinema.
Okay.
These immersive experiences offer something streaming simply can't replicate.
Right.
They've also experimented with dynamic ticket pricing where the cost varies based on seat location.
Oh, yeah. Didn't that idea get some pushback?
It did. It seems neither competitors nor customers were thrilled about the idea, so it didn't quite take off.
Okay.
Yeah, but it shows that AMC is willing to experiment and think outside the box, which is crucial in this evolving entertainment landscape.
Right. Which leads us to the person calling the shots, AMC's CEO, Adam Aron. What kind of leader is he? Is he the captain steering the ship through this storm, or is he just along for the ride?
Adam Aron, who took the helm in 2016, is known for shaking things up.
Okay.
We've seen stock offerings, debt restructuring, and even a reverse stock split during his tenure.
For those of us who aren't Wall Street wizards, can you break down what a reverse stock split actually does?
Sure. Essentially, it reduces the number of outstanding shares while increasing the price per share.
Okay.
It's often done to boost the stock price and avoid being delisted from an exchange.
So a bold move, but not necessarily a sign of a healthy company.
Exactly. And that leads to some concerns about Aron's strategy. On one hand, he's invested heavily in upgrading theaters and those premium experiences we talked about. On the other hand, AMC has paid out special dividends while operating with negative free cash flow.
That sounds a little like throwing a party while the house is on fire.
It's definitely a move that's raised eyebrows among analysts. Is it sustainable? Only time will tell.
Yeah.
Let's delve into their financials to get a clearer picture of their overall health.
That brings us to the numbers. Paint us a picture of AMC's financial landscape. Are we looking at a lush green valley or a barren wasteland?
It's more of a mixed bag, unfortunately. While they experienced some revenue growth in 2022 and 2023, things have been declining since then. Their profit margins are thin, meaning they're not making much profit for every dollar they bring in. And this is compounded by the fact that their debt-to-equity ratio is negative.
Okay, red flag alert. What exactly does a negative debt-to-equity ratio mean?
It essentially means they owe more than they own. Imagine it like having a mortgage bigger than the value of your house. It's not a great position to be in, and it definitely raises concerns about their long-term financial stability.
So not exactly a glowing report card,
Right.
but this is just the first act. We'll be back after a quick break to unpack market sentiment, their ownership structure, and dive into a SWOT analysis to assess their risks and opportunities.
Sounds good.
And while we take a minute to grab a fresh cup of coffee and those buttery popcorn kernels we were talking about,
Yeah.
we want to hear from you. What are some stocks you're keeping an eye on? Drop your favorites in the comments below. We'd love to see what you're thinking about.
For sure. Now, let's shift our focus to Wall Street and, see what the experts are saying about AMC.
Okay.
Is the overall sentiment more optimistic or pessimistic?
From what I've been reading, it seems like the analysts are kind of split down the middle.
Yeah.
Some are saying buy, buy, buy,
Yeah.
while others are urging investors to jump ship.
You've hit the nail on the head. Analyst ratings on AMC are all over the map. Some recommend holding on to your shares, while others are suggesting reducing your holdings, and then there are those who believe there's potential for growth.
Right.
The average price target is around $4.40 per share, but that number is just an average.
Right.
There's a pretty wide range of individual predictions.
So it's resulting in a real gamble. What factors are contributing to this divide among the experts?
It really boils down to their confidence in AMC's ability to navigate this evolving entertainment landscape.
Okay.
The bulls, those who are optimistic, point to the recent recovery of the box office.
Right.
People are returning to theaters after the pandemic slump,
Uh-huh.
and that's a good sign.
Right. There's something special about seeing a movie on the big screen
Yeah,
that you just can't replicate at home.
exactly. But the bears, those who are more cautious, are quick to point out that there are still plenty of challenges, especially in the European market. And of course, that looming threat of streaming services isn't going away anytime soon.
So it's the classic battle between like hope and uncertainty.
Yeah.
It makes you wonder who's really pulling the strings at AMC.
Speaking of which, let's talk about their ownership structure. I know we touched on the fact that retail investors play a big role here.
Yes.
Can you expand on that?
Absolutely. What makes AMC particularly interesting is that a significant portion of their stock is held by retail investors, not massive institutions like hedge funds.
Okay.
We're talking about individual investors, everyday people who are making their own decisions about where to put their money.
That's quite unusual for a company of this size, isn't it?
It is, and this dynamic has some pretty significant implications. Retail investors tend to be more reactive to news and market swings, which can lead to increased volatility in the stock price. So it's less of a steady climb and more of a roller coaster ride. You mentioned that this puts pressure on AMC's management team.
Yeah.
Can you explain how that works?
Think of it this way. Instead of answering primarily to Wall Street analysts, AMC's management now has to consider the opinions and expectations of a vast and vocal base of individual investors.
Right.
This makes decision-making a real balancing act as they need to try to please a much broader and more diverse group of stakeholders.
That sounds like a tough position to be in.
Yeah.
It's like trying to please everyone at a party, which, as we all know, is impossible. But before we pass final judgment, let's dive into a classic SWOT analysis to really understand the risks and opportunities at play here.
Okay.
What are AMC's core strengths?
Despite the challenges, AMC does have some key advantages.
Okay.
First and foremost, their massive network of theaters gives them incredible reach, and their brand recognition is undeniable. We all know what the AMC logo looks like, and that familiarity carries a lot of weight.
Right. They've also been investing in those premium experiences we talked about earlier,
Yeah.
like IMAX and Dolby Cinema.
Exactly. Those offerings are a big draw for moviegoers who are seeking a more immersive experience that they can't get at home.
Yeah.
So to summarize their strengths, we've got scale brand power and a push towards innovation. Not a bad starting point.
But as with any business, there are weaknesses too. What are some of the potential pitfalls for AMC?
Well, those inconsistent earnings we discussed earlier are a major concern. They haven't demonstrated a consistent ability to turn a profit. And we can't ignore that mountain of debt they're carrying. That negative debt-to-equity ratio is a flashing red light.
Right.
And of course, that vulnerability to streaming services is a constant pressure.
So it seems like the weaknesses are essentially the flip side of the strengths. They're big,
Yeah.
but that size comes with financial baggage. They're trying to innovate.
Right.
But the competition is fierce.
It is.
What about opportunities? What are some potential avenues for growth that you see?
Well, the continued recovery of the box office is a promising sign. People are eager to get back to their shared experiences.
Yeah.
And there's potential for expansion into international markets where moviegoing is still on the rise. And they could further lean into those premium offerings.
Maybe even partner with streaming services in some way.
Yeah.
Offer exclusive content or early releases.
That's a really interesting idea.
Yeah.
It could be a way to bridge the gap between the two worlds and offer something truly unique.
It sounds like they have a lot of options,
Yeah.
but also a lot of obstacles. What about threats? What external factors could derail AMC's comeback?
Well, let's be honest, competition from streaming services is the elephant in the room.
Yeah.
It's a constant pressure, and it's not going away anytime soon. We also have to consider the possibility of an economic downturn.
Right.
When people tighten their belts, entertainment is often one of the first expenses to get cut.
Yeah.
And of course, there's always the risk that consumer preferences continue to shift away from traditional movie theaters.
So a lot of potential pitfalls to navigate. It sounds like AMC is at a real crossroads. What's your final takeaway from all of this? Is AMC a buy a sell or a wait and see? It sounds like a classic high-risk, high-reward scenario.
It really is. AMC has a potential for a comeback.
There are a lot of factors at play.
A lot of factors, yeah. Their success really hinges on, their ability to adapt and innovate. And of course, navigate those financial headwinds we've been talking about.
Right. And of course, we always remind our listeners that this is just our analysis based on the information we've gathered.
Yes.
The stock market is inherently unpredictable.
For sure.
And there are always risks involved.
Absolutely. It's crucial to do your own thorough research.
Yeah.
And perhaps consult with a financial advisor before making any investment decisions.
Right. We're here to provide insights and, spark conversation.
Yeah.
But ultimately, you're the one in the driver's seat.
Exactly.
When it comes to your own financial journey.
Now, before we wrap up, I wanted to leave you with a final thought, something to really ponder.
Okay. I always love these final thoughts.
Get the wheels turning. We've spent this entire deep dive talking about the challenges traditional movie theaters face.
Right.
In the age of streaming. But what if AMC could actually leverage the rise of streaming to its advantage?
That's a really intriguing idea.
Yeah.
How could they possibly turn this, threat into an opportunity?
Imagine if they partnered with streaming platforms to offer exclusive content or early releases to their subscribers. They could create a hybrid experience that blends at-home viewing with special in-theater events.
Like a watch party.
Yeah, like a watch party.
With bonus content or behind-the-scenes footage.
Exactly.
That you could only access at an AMC theater.
Precisely. Or they could even launch their own streaming platform.
Wow.
Dedicated to curated classic films or independent cinema.
Okay.
That might struggle to find an audience elsewhere.
That's a bold move.
It is.
But it could be a way for AMC to differentiate themselves and tap into a whole new market.
Innovation is key to survive and thrive in this constantly evolving landscape. AMC needs to be creative, adaptable.
Right.
And maybe even a little bit disruptive.
Lots to think about. What do you think?
Yeah.
Could AMC actually embrace streaming and turn it into a strength?
Yeah. What do you think?
We'd love to hear your thoughts. Drop a comment below.
Yeah, let us know.
And let us know what you think the future holds for AMC.
And until next time, keep exploring, keep learning.
Yes.
And keep diving deep.
And don't forget to hit that subscribe button for more deep dives just like this one.